All right, what is up, traders? What's up, tycoons? Super excited for today's video. Going to give you guys another natural gas news update, cover some of the recent news around natural gas. We're also going to take a look at the spot prices. We're going to take a look at the futures chart and a breakdown of UNG and Boyle. So make sure to smash that like button, subscribe to the channel if you guys are new. If you're looking for a place to get some constant updates every single week on natural gas and what's going on surrounding natural gas, this is definitely going to be the channel for you. Now, with that being said, of course, none of this video is financial advice. We're rather just going over some of the data and giving you guys a resource to stay up to date on, some of the news and data. So let's go ahead and jump straight into it. And we can see that the U.S. natural gas demand is light with warm weather, according to an EIA report to show a large withdrawal. Now, some of the key takeaways of that report was that the nat gas weather predicts that today's EIA storage report could be a source of volatility, with survey averages suggesting a draw of -71 to -76 BCF, larger than the 5-year average of -45 BCF. Natural Gas Intelligence also forecasts a larger than average withdrawal for the week ending March 17th, with withdrawal estimates ranging from 66 to 81. As of March 10th, the total load 488 working gas and underground storage was 1,972 BCF, which is a surplus of 378, roughly 23.7% to the 5-year average. And U.S. natural gas prices trade just above the multi-month lows despite bullish storage report. The futures hit 1-month low due to increased output and warmer weather forecasts. And some of the key takeaways of that report was that the U.S. natural gas futures hit a 1-month low on Thursday due to increased output and warmer weather forecasts. Concerns about Freeport LNG plant in Texas also weighed in on prices despite record high gas flow to U.S. LNG exports. The EIA reported 72 BCF natural gas withdrawals from storage for the week ending March 17th. We kind of went over that in some of the early estimates for March. For March 24th suggests a steep decrease in natural gas stocks, averaging 55 BCF, despite stocks remaining above last year's levels and the 5-year average, and production staying close to record levels. Now, the U.S. natural gas demand exceeds supply as LNG exports jump. Strong LNG exports have helped boost U.S. gas demand in 2022. The U.S. natural gas prices have dipped in recent months due to warmer than usual winter weather, and they keep spinning this warmer than usual winter weather. Winter is pretty much over, guys. If I'm not mistaken, we are officially in spring now, so it's still kind of is a little bit of a mystery to me that they keep speaking of warmer than usual winter weather, things like that. I mean, we're kind of out of winter now, so we're going to see how the narrative changed. That could possibly change into a warmer summer narrative, which could, cause prices to go up. That's just speculation. We'll have to see exactly how things are going to go. But U.S. natural gas prices have dipped in recent months, again, due to this warmer than usual winter weather, which required lower volumes of withdrawals from storage. As a result, working natural gas stocks in storage is around 24% more than the 5-year average and 36% more than last year at this time. This puts downward pressure on Henry Hub prices, which when we look at the spot price that I'm going to show you guys later, I look at the Henry Hub spot prices, okay? Now, tight LNG supplies contributed to increasing international prices, which reached record levels, incentivizing U.S. LNG exports. And that's a pretty big topic, especially, on the international scale, has been LNG and the LNG exports. The surge in exports to Europe meant that U.S. LNG exports to Asia declined as China and other importers of U.S. LNG, they scaled down buying due to Chinese zero COVID policy last year and the high prices with South Asian importers couldn't afford. The most notable reduction was in U.S. LNG exports to China, which decreased by 78%. So it's going to be interesting to see, does this start to pick back up, perhaps, now that China is out of their zero COVID policy? Now, the Henry Hub averaged 6.38 in 2022, up from 382 in 2021. This was the highest average spot price at Henry Hub since 2008, right around the financial crisis. And, if you look now, we're also going through a bank crisis. We're in the midst of one, right? We had Silicon Valley Bank, we have Signature Bank, First Republic, even FTX, even Silvergate. Now you have Credit Suisse. So, there is a chance that history may repeat itself. And, if we go into a really bad recession, if we go into this financial crisis, it's almost kind of like we live in an algorithm sometimes where things don't always have to make sense, but some of these patterns tend to repeat themselves. So it's going to be really interesting to see what happens with energy, natural gas, and things like that. If we end up going into a recession, if we end up going into, a true financial crisis, as of right now, Jerome Powell and, the government and the Fed, they're kind of just saying that, hey, we're not in a banking crisis. These were isolated incidences, and that this time is different. But this time is different is one of the most dangerous phrases to use, especially in investing, whether it's through commodities, stocks, whatever. Now, this year, Henry Hub prices have dropped due to milder winter weather in January and February in many parts of the United States. Natural gas inventories rose to above the 5-year average, weighing down on prices. In its latest short-term energy outlook, the EIA cut again its estimates for natural gas prices for this year and the next. The EIA now sees prices averaging 3.02, down 11.2% from a previous forecast. And as a result of the mild winter and low natural gas consumption in the residential and commercial sectors, the EIA expects 2.4% less U.S. natural gas consumption in 2023 than in 2022. So you want to kind of keep some of this stuff in mind as you're trying to, I know a lot of people are trying to invest in UNG. I know a lot of people are trying to invest in Boyle. And it's good to stay up to date on some of this stuff. You may not see those immediate returns that you guys are looking for, and you need to have some type of risk management. Now, as a result of the mild winter and lower natural gas consumption in the I already said that part, but yeah, basically, they're lowering their expectations for the year on consumption, and they're lowering their expectations for the prices, for the year of 2023. So just keep that in mind. Now, we have a nice little chart here, okay, and this basically shows you the working gas in storage in the U.S. You have the actual injection / withdrawal, the range of ejection, the year-ago injection. This yellow line here is the difference to the 5-year average, and then in blue, we have the year-over-year difference, and we can see that this is really high right now. All right, that's at about 504 BCF. And then the difference to the 5-year average is about 351. So we are much higher than that right now. And then in green right here, we have the Henry Hub index. All right, and you can see that this thing has been trending down as these has been going up. So, that's just, a nice little chart to help summarize and visualize some of the data we've been talking about in these reports. Now, this is natural gas, all right, the Henry Hub spot price, and this is the sub $2 time range. Now, again, this video is not financial advice, but this is one of the reasons why I am currently interested in natural gas and really just nibbling my way into investing into natural gas. Now, just because I'm doing something doesn't mean that you should. This is simply just a free video on YouTube, and I'm just speaking nothing but my opinion. But look at the time range here, right? And so if you can see, I actually have it highlighted. So this is where the natural gas spot price is actually testing some. We have $1.94, $1.75, and $1.61. These are these three blue lines right here. All right, and you can see that we're actually testing these levels now. When I started recording this, spot price was at 193, and we have not stayed. We've stayed at these levels for long periods of times, but look compared to the chart. All right, overall, and this is a monthly chart, how long we really stay down here, right? We had a period of 150 days, roughly half a year. Over here, we had about 330 days like below $2, so close to a year. Over here, we had about 245 days. So let's just call that like 2/3 of a year. And over here, we had 336 days. So, it is possible prices could rebound and go back up soon. But realistically, we're looking at anywhere from about 150 days to about a year that natural gas will normally stay at this sub $2 range. Okay, so, if you're looking to get these super quick returns, which I know a lot of people are, they're saying, oh, Boyle's going to go back up to 50 in the summer. Boyle's going to go back up to 80 in the summer. You have to keep in mind, this chart right here. This is a really nice chart. And this is one of the reasons that, like I said, like I'm interested in natural gas right now is because it's at record lows. It still can go lower. Okay. $1.75 is going to be really the next big support level when it comes to the spot price of natural gas. And we have $1.61 below there. And this is the all-time chart for it. on TradingView that we have. So, you can see that it, again, it typically for about half a year up to a year, will trade and, fluctuate in these price ranges. So, just keep that in mind, okay? And also a lot of that news, they suggested that we were, cutting expectations for prices and consumption. Now, this is the natural gas futures monthly chart right here, and things were starting off very good, right? We have this hammer candlestick pattern right here, which is actually a reversal, but the follow-up candle for March did not really go the way that we wanted. Now, March is still not over. We could miraculously, close up here. And if we can close above this high on our hammer candle, then that would signal some type of a reversal. But really, this overhead supply zone that we have here from about 230 up to 260 on the futures chart has been really strong, and it's continued to push price lower. And it looks like we're trying to gravitate towards our demand zone down below that we've bounced off of multiple times in the past. So that's what I'm looking at on the monthly chart. Now, if we zoom in a little bit more, this is the natural gas futures 4-hour chart, and we got the gap fill, right? So if you've been watching these videos here recently, right, I highlighted that we had this rising wedge as we entered into our supply zone, and we got a breakdown retest of the trend line, which is very textbook, and we've come down and we've pretty much completed this rising wedge pattern right here. And we also got the gap fill. Now, initially, I was telling you guys 209.3 was the line in the sand. And once we really broke below that level and flipped it to resistance from support, you can see we actually did fill that gap. And gaps are pretty important. I love tracking gaps and keeping an eye on them because they fill about 90% of the time. Historically, the big question is when they're going to fill, not so much if they're going to fill. There is that 10% chance they never fill, but it's more so a matter of, hey, are things about to fill sometime soon? Or could this gap take months, weeks, years to fill, right? So that's why I like tracking these gaps. And you can see we broke below our support level of 209.3. We flipped that to resistance here, rejected it about 4 or 5 times on the 4-hour chart, and we're pushing lower. And we've actually created this bearish channel that looks to be taking us towards that demand zone that I mentioned down below. Now, one thing, we could see some bounces along the way, right? So it's not entirely bearish. If we actually look at our MACD, we have the red line just curled up above the blue line here. That's a possible entry signal. And then we also have some bullish divergence on the relative strength index. So if you take a look, right, we have these lows here, and then we have slightly lower lows here. And the RSI has a low and a higher low, and we're actually making an uptrend while we're in this bearish channel trading lower on the natural gas futures. So we could see, I wouldn't be surprised to see some type of a bounce, but overall the trend has been, extremely bearish in natural gas, and that may continue throughout 2023. And as I mentioned, it could take anywhere from 150 days to a full year for us to really rebound out of these, historic lows that we're testing right now. So definitely keep that in mind. Now, this is the natural gas spot price. This is the RSI and the MACD signals. These are really efficient, and this is the daily time frame, and has been, very, very useful for spotting potential entries and exits. I'm going to go over some of these real quick. And mainly what we're looking at is divergences. So if you take a look here, we have this point where we're creating a low and then a lower low, right? So, natural gas was clearly heading lower. But if you look at your RSI, we had that bullish divergence where we had a low and then a higher low. So we're building relative strength as the price is going down and getting cheaper. This is bullish divergence. And then we also got the MACD to curl above the blue line here, which would be an entry signal. And we can see that we got a nice move to the upside afterwards. Now, it works the opposite way as well with bearish divergence, where we're creating higher highs, but making lower highs on the relative strength index. This would be bearish divergence. And you see the MACD crosses below that blue line, and we end up getting a sharp move to the downside. Here, we got bullish divergence again. All right, with lower lows on the spot price, higher lows on the relative strength index. We got a red line crossing above the blue line on our MACD, and we got a very nice move to the upside. And this has played out several times in the past year when it comes to the spot price of natural gas. Now, something that was pretty relevant, all right, was we had this initial bearish divergence that helped fuel the drop down. It's not the only thing, but, the technicals do help. There are a lot of traders who trade just based off technicals. And we can see we have these slightly higher highs here, but the RSI was making lower highs. We got a MACD sell signal right here, and then we've had this huge move to the downside ever since. All right. And this, I mentioned that this initial bearish divergence trend line, if we wanted to see, when prices were over here, I said we need to see a breakout, retest, and then push back up higher, not a look above and fail. A look above and fail would be a bearish signal. And the reason being is because bulls are presented the opportunity on this breakout. And if they don't break out and they fail, it shows that sellers are still in control. And so we did get the look above and fail. And you can see that the spot price is heading down to my major support level here of $1.87. Okay, so that's really where I'm looking at. A key level is going to be $1.87. We're going to see what happens there. If we look at our MACD right here, it's starting to curl to the downside. All right, the red line has just crossed the blue line. This doesn't mean that it has to curl straight down. We could see it curl back up. Okay, but if this thing continues to head in downward motion, most likely we're going to retest some of those lows that I showed you guys on the previous natural gas spot price chart. Now, we also had initially some bullish divergence that helped cause this little pop that we had over here. But if you take a look, we have this low right here. We have this series of higher lows, and we're now testing this trend line again. The more times you test a trend line, the weaker it gets, right? So we had a low here, okay? And then we had these lower lows here, and now we've created another lower low. So, we do still have that bullish divergence, but if this MACD line continues to cross down and we don't get a bounce off of this bullish divergence trend line, most likely we're going to, if this bullish divergence trend line breaks and this thing breaks right here, we're going to see the price of natural gas continue to go lower. So definitely keep that in mind. It doesn't have to. We could actually get the bounce off of that bullish divergence, and that would be something nice to see. But the more times you test a trend line, the weaker it gets. And this trend line's been tested a few times. So there is a possibility that if we break that and we get that MACD exit signal, the spot price of natural gas could be due for some more pain. Now, this is Boyle. Okay, Boyle, does have a bullish divergence here as well on the relative strength index. All right, if you take a look, we have this low, we have a lower low here, and we have a lower low here, but we're actually making lows, and higher lows. So similar to the spot price, we're about to test this trend line right here. And if we don't get a bounce and we break through this bullish divergence trend line, most likely we're going to see a breakdown in Boyle. We do have a little bit of a falling wedge right here. You could call this a falling wedge. So it's going to be interesting to see, can we hold this trend line right here and continue to bounce up a little bit? We recently just broke our 435 support level here for any chances of a double bottom. And it appears for now that we're trending lower towards this $3.20 price level that I have on Boyle, which is a key level that I've really been watching. I haven't bought any Boyle shares. And the reason being is just because things that tend to be making all-time lows, most likely they continue to make all-time lows. Now, eventually a bottom will be put in, but I don't necessarily know where that bottom is going to be. So I'm not trying to rush into anything. And we're going to see if we come down to that 320 area, then I may consider grabbing some Boyle for the long term when it comes to shares, or I may just continue to wait and see if we break through that 320 level and head lower. Now, the MACD on Boyle on our daily time frame is curling right here, and it's basically squeezing right now and touching the blue line. So, it's going to be interesting. Does this turn into a sell signal, guys? Does this red line cross below the blue line? Does this bullish divergence trend line break? If so, we're most likely definitely going to come down to that 320 area, if not potentially break below there. Now, again, this doesn't have to be bearish. Okay, we could bounce off of this bullish divergence trend line, and the red line could bounce off of this blue line on the MACD, and we could try to get this falling wedge pattern to play out and take us back up to our 795 area. That's a possible scenario, but 795 is a major overhead resistance. We also have a gap up here on the daily time frame. So, we could see that gap fill. All right, 435 is that previous bottom that we had here. All right, so we need to break through 435. You can see we rejected it yesterday. And if we do that, we have the possibility of coming up and testing this trend line. If we break through that trend line, we could fill this gap or come up and test that 795 level. So that's definitely some stuff I'm watching, right? We could see some short-term volatility, but ultimately, when it comes to the long term, I think that, natural gas could be due for a little bit more pain. So it's important to try to have a good strategy, have some type of risk management. Think about the things that you really, are why you started investing in it, why you are thinking about investing in it, and set some realistic expectations. If you're getting in oil, don't try and, think that it's going to go to 100 anytime soon. Now, it was just in the hundreds not very long ago, so it could go back there. But will it happen relatively soon? I don't think so, right? So hopefully you enjoyed this video. Smash that like button, subscribe to the channel, and I'm out.